Week 5. 5 red days in a row. Wednesday minus 1.53%. Thursday minus 5.66%. Friday minus 3.47%. Monday minus 0.94%. Tuesday minus 2.90%. TQQQ is down 13.22%. This is the worst week of the experiment so far. But I still bought every single day. Just to be sure, nothing in this channel is financial advice. This is an experiment, it is entertainment. Always do your own research before investing anything. So let me show you exactly where we stand after 5 weeks. Portfolio A, the boring one, VOO has a value of 92.92 euros, which is minus 0.62%, which is a minus value of 0.58 euros. Portfolio B, the amplified one with TQQQ, has a value of 81.16 euros. That means a drop of 13.22%, which is a decrease in value of 12.30. That means that the current leader at the moment is VOO, which leads by 11.67 euros. VOO is down less than 1% since we started. TQQQ is down more than 13%. The gap is 11.76 euros in 5 weeks. But I want to show you something more specific about this week, because this was just not a bad week. This was a case study on what leveraged ETFs do in a sustained sell-off. Here are TQQQ's daily closing prices this week. On Wednesday, the 22nd of July, it had a value of $70.28. On Thursday, the 23rd of July, it had a value of $66.30, which is a drop of minus 5.66%. On Friday, also minus 3.5%. On Monday, minus 1%, and on Tuesday, almost -%. These are 5 consecutive red days, not one green day this week, and every day I bought 5 more euros of TQQ at a lower price. Now some of you are looking at those numbers and thinking, why would you keep buying into something that drops every single day? And that's exactly the right question, and the answer is the educational concept for this week. But first, let me put this week in context. When the market drops and you keep buying, you are accumulating more shares at a lower price. On Monday and Tuesday, I bought TQQQ at 63 and 61 euros instead of the 70 euros it was at the start of the week. Those cheaper shares will matter more when TQQQ eventually recovers. And that is not a guarantee. That is the logic of daily buying. And it is what keeps me pressing the buy button even on the bad days. Let's take a look at the Fear and Greed Index, because this week the index dropped to 39, down from 44 last week. Let me show you the trend since the experiment started. Week 1, 31, extreme fear territory. Week 2, 43, fear recovering. Week 3, 44, fear holding steady. Week 4, 44, fear unchanged. Week 5, 39, fear getting worse again. The market has been in fear territory every single week of this experiment, and this week it got more fearful, not less. AI spending doubts, the Federal Reserve, oil prices, tariffs, all of it is keeping investors nervous. And nervous investors sell technology stocks first, which is exactly what TQQQ amplifies. Let's take a look at 3 market events of the past week. And event 1, investors questions the AI trade. The biggest story this week was a sharp sell-off in semiconductor and technology stocks. Even though companies like SK Hynix reported record profits, investors were disappointed because expectations had become extremely high. More importantly, Alphabet and Tesla's earnings raised a difficult question. How much money is big tech spending on AI, and will those investments ever generate enough returns? And when investors lose confidence in the AI trade, TQQQ falls harder than VOO, and that is exactly what happened this week. Event 2, all eyes are on the Federal Reserve. Markets spent the week waiting for the Federal Reserve's interest rate decision. Most investors expected rates to stay unchanged, but persistent inflation and rising oil prices have increased the risk that interest rates could stay higher for longer than anyone hoped. Higher rates are bad for growth stocks because they reduce the value of future earnings, and TQQQ is almost entirely growth stocks. And then the last event of this week, the Middle East tensions and US tariffs. Geopolitical tensions in the Middle East continued to push. Geopolitical tensions in the Middle East continue to push oil prices higher. At the same time, new US tariffs raised concerns about inflation and slower global growth. Both of these things make the Federal Reserve's job harder, and they both keep investors cautious. So, the week in one sentence: AI doubts, rate fears, and geopolitical uncertainty hit at the same time. TQQQ absorbed all of it 3 times over. And that's why I wanted to take a closer look on the concept of the daily reset. Why? Because last week I introduced the concept of leverage and the daily reset, and this week I want to go deeper because this week gave us something unusual: 5 consecutive red days. This is the perfect real-world demonstration of what the daily reset actually does to a leveraged ETF over multiple days. Let me walk you through the math using this week's actual numbers. TQQQ started this week at $70.28. If TQQQ were a simple 3 times multiplier of the week's total move and the Nasdaq dropped roughly 4.5% over the week, TQQQ should have dropped roughly 13.5%. And that is roughly what happened, 13.22% down. But there is an important part. The damage compounds differently depending on whether losses happen all at once or spread across multiple days. Let me show you 2 scenarios. Scenario A, the Nasdaq drops 13% in one single day. Scenario B, the Nasdaq drops roughly 2.6% per day for 5 consecutive days. Both scenarios end with the Nasdaq down roughly 13%, but TQQQ ends up lower in scenario B. Here is why. In scenario A, TQQQ drops 39% in one day, brutal, but a single drop. In scenario B, each day TQQQ drops roughly 7 to 8%. Then the next day it drops 7 to 8% again, but from a lower base. The daily reset means that each loss compounds on the previous loss. A 7% drop followed by another 7% drop is not 14%, it's 13.5%. And then the next day 7% comes off that lower base. By the end of 5 days, the compounding of daily losses had created a deeper hole than one equivalent single drop would have. And this is the core risk of leveraged ETFs in trending bear markets or prolonged sell-offs. Now, here is the other side of this that I want you to understand. Every day this week when TQQQ dropped, I bought €5 more. On Wednesday, I bought at roughly €70 per share. On Thursday, I bought at 66. On Friday, at 64. On Monday, at 63. On Tuesday, at 61. My average purchase price for the week was lower than Monday's opening price. My average purchase price for the week was lower than Monday's opening price, which means when TQQQ recovers, those cheaper shares will generate a higher percentage return than if I had bought everything at the top. However, this does not guarantee a profit. If TQQQ keeps falling, those cheaper shares just mean I'm losing slightly less money. But the logic of daily buying is that over time, across many weeks and many market conditions, the average price you pay tends to be lower than if you try to time the market. And here is something I want to say directly. 5 red days in a row is hard to watch, even when you know intellectually that you should keep buying. There is a moment on Thursday when TQQQ dropped 5.66% in a single day, where I paused before clicking buy. However, I clicked anyway, because stopping is a decision too, and stopping based on fear is exactly the behavior that turns a temporary loss into a permanent one. Next week, I want to show you what a recovery looks like after a week like this one, because if history is any guide, big sell-offs in the Nasdaq tend to be followed by strong recoveries. TQQQ in a recovery is exactly as interesting as TQQQ in a sell-off. So stay with me and follow this channel. But before I go, I have one question. 5 red days in a row, TQQQ down 13%. What would you have done differently this week? Would you have bought, skipped, or sold everything? Drop your honest answer in the comments. I read every single one of them. See you next week.